Hello, and welcome to everyone who's joining us for the web version of our workshop. We host monthly educational workshops at various branches and locations in the community. But we understand not everyone can get to us in person. So we'll occasionally offer versions that can be viewed right here on our website. Today we're talking about one of our most popular and influential topics, understanding your credit score. I'm Jason Rushfort, the manager of our Orange branch, and I'll be your host today. We thank all of our members who are watching this WebEx, and also want to offer some introduction to Connex for those who may not already be with us. We are a full-service financial institution serving anyone who lives, works, worships, or attends school in New Haven, Hartford, and Middlesex counties. With the mission to improve the lives of our members, one member at a time, we offer a full range of financial products and services. As a credit union and the Unbank, we return our profits to our members in the form of better rates and lower fees. We're also a safe place to keep your hard-earned money. As the fifth largest credit union in Connecticut, we have $366 million in assets and more than 40,000 members. We're also insured by the National Credit Union Administration, a federal government agency that insures your deposits and gives you peace of mind. So, let's get to our topic. What exactly is a credit score, and why are they so important to manage properly? Essentially, it's a number that helps lenders and other types of creditors gauge how likely you are to pay effectively and on time. It's a compilation and calculation of the information contained in your credit report and can range from approximately 330 to 850. There are three consumer credit bureaus that creditors report to: Equifax, Experian, and TransUnion. Not all creditors report to all three bureaus, so it's important to check your credit score and report with all three, as they can vary. You'll also want to know which bureau your potential loan sources use so you can anticipate the score they'll be using in their decision. For example, Connex uses information obtained from both TransUnion and Experian in our membership and loan decisions. Almost any type of creditor has the ability to check your credit and use it as part of their decision to grant you a loan or any type of financial relationship. So the most common ways it's used is to determine your ability to get approved for credit cards, loans, and mortgages. But insurance carriers, utility companies, landlords, and others have also been known to use credit scores in the decision process. Your score can also influence the interest rate you pay in these scenarios. Typically, the higher your score, the better the rate you receive. Your score can also influence the interest rate you pay in these scenarios. Typically, the higher your score, the better the rate you receive on things like mortgages, auto, and other types of loans. You can also experience that higher credit scores will help with things like speeding up the approval process on a loan application, reduce the amount of deposits required on things like utilities, get approved by landlords you're looking to rent from, and get better offers and have more access to different programs and options when it comes to things like credit cards and mortgages. Potential employers are also another common group that use credit in their decision process. It's certainly viewed that if you have a good credit score, you're likely to be more trustworthy and responsible. This chart is a good quick reference to show the components of your credit and how much they influence your score. The largest portion of your credit score is your payment history, followed closely by credit capacity. Length of credit makes up 15% of your credit score, and accumulation of debt and credit mix are each 10%. In the next slides, we'll take a closer look at each segment, how it's determined, and what it means to you and your score. As the largest factor influencing your credit score, payment history is just as it sounds. How timely and effective have you been at paying your debts by the due date, or how many times have you been late and by how long? Lenders look at these things to get a picture of what they can expect when it comes to payment back too. Most do take into account the severity of delinquency. Consideration may be given if you've had a few times where payment was 30 days late versus if you've had payments that were more than 60 or 90 days late. One of the biggest tips that I can give you, even if you miss the due date and you realize a couple days later, go ahead and make the payment right away. Don't assume that because you already missed it, that you'll just make up for it on the next due date. It's certainly not 100%, not true 100% of the time, but many creditors will not report you late until you're 30 days delinquent. So even if you've already been hit with a late fee, you'll help protect your credit by making the payment, even if it's a couple days late. Many creditors also offer grace periods, so it's important to know what each of your lenders allows for. Lenders typically look at more recent times and aspects of your credit, but as you can see, time frames that are further back also have an impact. Capacity makes up 30% of your credit score and is one of the more difficult pieces to understand. Essentially, this takes into account how much credit you have available to you, the total of your credit lines like credit cards and other lines of credit, versus the amount you're using. The lower your capacity, the more you're using of everything that's available to you, the more it negatively impacts your score. Length of credit. It's another factor and looks at how long your accounts have been open and the time since the last activity. One of the things that can help your score is time. It doesn't take a lot to bring a score down, but it can definitely take time and good periods of consistent payments to help bring it back up. One big tip here is to keep open the credit accounts that you've had the longest. So for example, even if you're working hard to pay off that lingering credit card debt from many years ago, leave the account open after you've paid it off. Cut the card up, but if you need not to be tempted to use it again, but leaving the account open helps ensure there are accounts that have been open for longer periods of time. Accumulation of debt is also something lenders look at. Usually things that have taken place over the most recent 12 to 18 months. So if you've had a recent large accumulation of debt, there could be a negative impact to your score. Reestablishing positive credit history after incidents of payment problems also helps show that you're heading back on the right track. Credit mix, just as it sounds, and it takes into account the different types of credit and loans that make up your credit report. Your credit score takes into account if you have a balanced mix of credit. Credit lines like credit cards and home equity lines of credit versus installment loans like mortgages and auto loans. There are also plenty of things that don't impact your credit score that can be misconceptions. Race, religion, national origin, gender, marital status, age, income, occupation, employer, employment history, and length of residence. These are things that do not have an influence on your credit score. The most common things that hurt your credit score are things like missing payments, which impacts the payment history portion of your score that we talked about. Maxing out credit cards won't hurt your capacity because it shows you don't have as much open credit available to you. Closing a credit card that is paid off could hurt your score if it's one of your oldest accounts. This was the example I used before when we were talking about length of credit. Multiple inquiries into your credit show that you're potentially shopping around or about to take on new debt. One suggestion would be to get pre-approved, which, of course, we offer here at Connex, for things like auto loans and mortgages, so you know how much you can afford before you start shopping, and so that each dealer you're shopping at doesn't need to pull your credit. This slide helps illustrate the potential impact of a bankruptcy. This is only an example, but it shows that a bankruptcy can have a much larger and potentially negative impact on a high credit score than it would on a score that's already considered low. These may seem obvious, but the things that most help your score are paying your bills consistently on time and over time continuing that good habit, applying for and opening new credit accounts only when absolutely needed, and of course, paying down your debt. Time is also one of the best healers of credit scores. It doesn't take a lot of time to do something that will drop a score, but it takes significantly more time to repair it and show positive history over time. This is an excellent chart that really helps drive home the point about having a great credit score and how that can really help your financial life and save you money. They, of course, aren't our current rates and are only examples, but check out the difference between the monthly payment for the same loan for someone whose score is 720 versus someone whose score is 550. There's a significant difference, and these tips we've been sharing about improving credit scores can really make an impact when it comes to getting a great rate on a loan. Another one of the most influential examples when it comes to credit, especially as it relates to paying down debt, is the difference between paying the minimum on a credit card bill and paying slightly more. As you can see in this chart, that should really only be used as an example to illustrate the point. Paying just $25 more than the minimum payment saves 24 years in payments and $7,000 in total interest. The difference is amazing, and sometimes paying off those bills in a faster and less expensive manner doesn't have to mean significantly higher payments. To narrow down all the information we've given you, here are some of the best tips for raising your credit score. Pay your bills on time. Get current and stay current, even if you've missed payments. Keep credit card balances low. Pay off debt rather than moving it around. And don't close unused credit cards as a short-term strategy to raise your score. Now, Connex, of course, offers some tools and resources in addition to workshops like this that help our members understand their credit scores and track them over time. Smart Score is a free service to our members with your choice or Unbank checking that notifies them quarterly of their credit score range. We also include information each time on helpful tips and information about credit scores and how to track and improve them. This is an example of that mailing. The image on the left is the actual Smart Score mailing that reminds you of the factors that influence your score and then provides your current credit score range. The image on the right is the informational insert. This particular one covers the topic we addressed in this session about credit mix and maintaining a good balance between the various types of credit and loans you have. Another great service we offer is our identity theft and credit monitoring solution. One part of the service is an even more robust score tracker than Smart Score. The other part of the service is identity theft resolution, and that gives you peace of mind, knowing that you'll have assistance if you ever need to recover from an instance of identity theft. Credit scores and ID theft really go hand in hand, as they can impact each other greatly. Watching and tracking your credit score and viewing your credit report is also one of the best ways to detect identity theft. Fluctuations in score that aren't a result of something you know about, like recently taking on new debt or closing a credit card, for example, can be one sign of ID theft and would alert you to take a closer look at your full credit report. Well, thank you for taking the time to view our workshop on understanding your credit score. If you have any questions, please visit one of our branches or give us a call at 1-800-CR-UNION. You can find a branch near you by clicking back over to our website and choosing Locations in the About Connex menu. Please look for future workshop topics available coming soon.